What is going on, you guys? Q here from Hyperstock. So we're actually going to do some charting tonight. It's primarily focused on the charts that have been requested by everybody in the chat. So this one's for a few members, and we'll go ahead and name the charts as we go. And it's going to start with a chart called PIC, or Pivotal Investment Corporation. Now, in terms of background on these companies, some of these companies I don't know too much in background, but I'll try my best to kind of analyze based on the sector they're in, how the overall sector is doing. Investment companies in general have been trying to play catch up to the rest of the market. Pivotal Investment Corporation is actually a fairly young company on the market. You could see it only came alive in October of 2019, and it has made a pretty significant move just a year later, just before October. It made a pretty significant move as it broke above 1050 and ran to 14. Since then, you can see the stock came back down and it retested 10 as support. So we have a very strong support at $10. The stock has gone up nearly vertically since that breakout above 10, which came right around earnings, or that was the expected earnings date. You can see volume kicked in, and the stock has managed to break above the high that it made back on September 21st. So the stock has now broken above 14, which makes 14 a significant support. So at one point, 14 was a significant resistance, and now that the stock is back above it, this $14 price point becomes a major support for the stock. The thing that worries me about this stock primarily is the ability of it to maintain these highs with such a vertical move. You typically want to see stocks gradually move into their price points and healthy zones. When it comes to moves this quick, especially on a young company with absolutely no historical analysis at this price point, we have no way to gauge how much it likes to hover around these price points. So any entry on PIC or any hold would be considered high risk, and your main primary focus is going to be at the support of 1560. You have a support at 1560, and you have a major resistance at 1720. So your primary points to focus on tomorrow is going to be a support at 1550 or 1560, and your main resistance to watch out for is 1720. Based on the volume that it experienced today, you can see that there was a lot of pushback from the stock since their highs today, and you can see that there's a lot of pushback from the stock from their highs today, but it also gained a pretty significant amount yesterday. Therefore, this pullback was necessary. The pullback was actually in a healthy state. Unfortunately, there's a lot of selling volume included in this pullback, so that's actually something to definitely take note of, because you typically don't want to see as many people selling the stock as the people who bought it. So take that in mind when you are trading tomorrow, and make sure that you leave a very firm stop loss point just below that 1550, marking the low of today. So if the stock breaks the low of today, then it may be in trouble of sinking back, and you may be best to exit your position. The next support is actually right over here at 1350. So you have supports at 1550 and 1350, and your major resistance is at 1720. There's not really a specific setup or a good setup on the stock at this point. Anything here would be a chase, or anything here would be high risk. The stock may push higher, but you'd have to monitor it closely. It's not something that you could leave alone. The next stock is on this list is going to be Palantir. I'm sorry. It's always a difficult name to say. In terms of their daily chart, actually, before we move into the daily chart, let's just talk about Palantir a little bit, because many people are still confused about what this company does and if they have upward potential from here. So just like PIC, this is a fairly young company to the market. It actually came alive October of this year. It IPO'd October of this year, and you can see the stock has had a phenomenal performance since then. Volume has just been shooting up. What does this company do? This company works in AI, and they pretty much work as an auditing company for government systems. So a lot of people are skeptical about AI. Palantir wants to put AI in government systems to make them smoother and more fluid for everybody down the line. They see a huge opportunity, and they're one of the few companies that does this. Therefore, with the world of innovation and the world of fintech, not fintech, with the world of innovation in general, you can see that these companies are going to thrive because they attract the younger, more hip investor who's looking for these niche opportunities in growing markets. So Palantir is the perfect high risk long-term play for a portfolio. But in terms of the short-term movement from the stock, you can see that the stock had pushed significantly today after they landed a contract. I believe the contract was landed with it's a software contract with the FDA. So good for them. They have done a phenomenal job so far. Obviously, any news this big, it's a $44 million contract, is a massive thing for a company, and you can see that volume reacted positively. The stock had shot up from what appeared to be a want to go down. So had you looked at the stock on Friday, this is actually a very poor setup in general, and the stock was likely to come down had it not been saved by that contract. So that contract came through, and they pretty much saved their territory above that $21 or $20 support. So good for them. In terms of the daily candle, we can see that there's massive buying. The stock is trading above that 10-day moving average, and we can see that the stock has a great volume. Now, I know the stock made a little bit of a move in the after hours. You can see the stock had ran up to $30. Let me just confirm that close. The stock did indeed run up to $30 in the after hours, and they closed that at that high. Now, one thing to be wary of when it comes to after hour movements is that they tend to fall apart by the time the market opens the very next day. The reason why is because so many people have bought it up in the after hours that by the time that pre-market trading starts the next day, there are a lot of people taking profits on their positions because they want to take advantage of that post-market run-up. So be on the lookout tomorrow for a potential pullback of Palantir. The most healthy support that it can maintain on that pullback is going to be $28. So as long as the stock maintains that $28 on that pullback, it'll be in a healthy territory, but it also has down to 26. So you have to really pick and choose which one you want to use as your stop loss. Unless you're in this company for the long run, then you typically would not want to worry about short-term technical analysis at all. So your main supports to look out for tomorrow are going to be 28 and $26. Another key support that you want to look at if the stock drops below 26 is this 10-day moving average. So anytime you see moving averages on a chart, they act as support and resistance points. So you want to be on the lookout tomorrow if the stock drops below 26 to maintain that 10-day moving average on the way back down. Stocks like Palantir, who have had this massive move as they did today, typically continue moving forward, but they are going to take some patience and they are going to take some time to consolidate. We're expecting some consolidation either anywhere above 26 or above $28, between 28 and 32. That's going to be the primary consolidation mode that we're going to be looking at. As long as the stock stays in this zone, we're going to consider it at its healthiest to eventually come around with a U-shape like breakout above 32 or above 34 to the next price target of $40. The next stock that we're going to be looking at is going to be INTC or Intel. So let's see what Intel did today. When we're looking at their daily candles, so the first thing I always like to look at is daily candles. We can obviously see that the stock has had a massive run. You can see that the stock ran up quite a bit over the last few weeks, and anything that runs up that fast eventually comes to a break because it just cannot sustain itself, and people are going to want to eventually take profits. So there's a very important gap down to look at. So when INTC gapped down once again for their earnings, they came down from a high of 54 down to a low of 48 and even lower. Eventually, any stock that gaps up or down will find a way to fill up that gap. And we can see that INTC did that so perfectly over the last few weeks, and it came to just below the $53. So 53 is going to be the most difficult zone for them to break because that's the gap down level. So it came just below $53 and people started taking profits. You can see that there was a lot of selling volume today as the stock broke below that wedge up pattern. What are we expecting for tomorrow? Well, there's one thing to consider, is it's the $51 resistance. So if the stock is able to actually make it above that $51 resistance over the next few days, it'll actually kick back into a healthier territory in which eventually it will consolidate between 51 and 53 to eventually break out of 53 and retest 55, and eventually it wants to fill this gap up from the previous earnings. So you know how we mentioned every stock fills that gap up? There's a gap up that INTC in particular has not filled up just yet. Now, INTC may not fill this gap back up unless traders actually see opportunity in the stock. There is a very difficult battle for Intel to catch up with their competitors like AMD and Nvidia, and a lot of investors are starting to give up on the stock altogether. Therefore, it's been in this downtrend for quite a while. What used to be a chip giant has now diminished, which tells you the cycle of the market, or every corporation eventually comes to an end. Unfortunately, Intel is becoming a hopeless cause for a lot of people. I believe that they'll be just fine. I think they just need to adapt and innovate a little bit stronger for them to have the outcome that we're looking to have. As far as right now, I wouldn't really enter a trade on the stock. If you are in a position, consider using the low of today of 49.50, and then you can also use 48.40. So 48.40 and 49.50 as your supports. If you are in the stock, consider placing a stop loss just below either of those, depending on your own risk tolerance. The next stock we have on our list today is going to be Social Life Network, which is WDLF, which is actually a stock that I have never heard of personally, but we can see that it's on the OTC market. So when we talk about the OTC market in general, anything on the OTC market is going to be considered high risk. No matter how reputable the company is, or however many plans they have, whatever it is, it's OTC. It's for sure high risk, and it's not a stock that you typically want to hold for too long, because they are completely unexpected, and this is the proof in the pudding right here. You can see that there is an absolutely random breakout from the stock over the last 3 days that has pushed it way deep in the overbought territory. So the oscillator, or the indicator that I have here, is the RSI. Anything over the 70-point price, over the 70 points on the RSI is considered overbought, and you can see that this one is well into the 100. So definitely an overbought stock, definitely a high risk stock. It's not something that I would personally consider a reputable trade, or a reputable swing trade per se. Stocks like this definitely have an opportunity to give a day trade to a trader, so a potential in and out through the day, but you don't want to be swinging a stock of this magnitude and this risk. If you are looking for a play on this stock, you have to consider its past, and you can see that the stock is deep in the dumps since they came to life. And you may be asking, why is the stock's 5,000, or why was it 7,000 at one point? And that's because of the reverse splits that it's had. So this S right here is called a reverse split. You can see that the stock split 1 to 5,000, meaning for every one share that used to be on the market, now there are 5,000 shares. And companies typically do that because they want to provide more liquidity in and out of the stock, and they also want to provide an ability to stay on the market, because eventually they can get kicked off. So this is definitely not a stock that I would consider for myself or for a setup. However, if you are looking for a setup on the stock and you desperately want to trade it, you can look for a breakout above 0.10, that is, which is going to be a very it's going to test you. It's going to test your patience, especially stocks this cheap, because they're not going to get as much attention as many other more mainstream stocks. So you want to look for that breakout above 0.010. In terms of price target, this is one of the stocks that you always want to watch or monitor as long as you're in the position, and you want to consistently take profits as it moves up, and you want to update your stop loss, but not seeing too much opportunity here, so I would kind of skip over this one if I were you. Next stock on our list is going to be Chronos, or CRON, and a very interesting move from the marijuana industry lately. It seems like whenever the good news actually comes out, the stocks perform poorly. So that's one thing about the market. You don't ever want to trade news. You want to trade the rumor before it becomes news, and then you typically want to take profits right around the same time the news comes out. And that's just because the market is built to work against you. By the time you hear about the news, it's already dead history, and many people already know about it. In terms of long-term potential, or maybe medium-term potential for a stock like Chronos, we can see that marijuana stocks in general have had a very nice recovery over the last few months. Especially lately, they've had a pretty strong run, considering our new president is actually an advocate of legalizing marijuana on a federal level, and Chronos is one of the few names that's out there that is reputable enough to actually be worth an investment for a lot of traders. Obviously, any investment in the marijuana industry would prove to be high risk. Reason why is because these companies have yet to turn profit. The most successful players in the marijuana industry have been companies that actually have to do with the cannabis industry, but don't actually sell the product. It's the companies that are controlling the real estate. It's the companies that are controlling the supplies or the light fixtures, stuff like that. Those companies are actually winning in the marijuana industry. It's going to take a long time for the actual cannabis distributors or shops to actually make money or turn profit on the market. In terms of the chart itself, the stock is actually in a pretty healthy territory even after today's pullback. The stock has a major resistance at $7 and another resistance at $8. Between 7 and 8, it's going to be medium risk, but if between 8 and 9, it's actually at the lowest risk possible for entry. Our main focus for the next few weeks is for the marijuana industry to take some time to consolidate, because they did have a pretty massive run since the Biden presidency. So we want to take some time and let them consolidate eventually to test for Chronos in particular a breakout above $9 for a price target of $11. The next stock on our list is going to be Fedex. So Fedex has earnings coming up. So with earnings coming up and holiday season and people working from home and people shopping from home, obviously Fedex is expected to do well. But unfortunately, when it comes to earnings, we don't want to ever take that risk. Personally, I don't play any earnings. I like to play low risk. I like to approach a low risk, not too aggressive style to my trading. Fedex having earnings coming up soon, I do not want to be in the stock as it goes into earnings. However, the stock may give us a trade before earnings. So the primary resistance that we want a breakout above is going to be $300. You can see that there is a perfect double bottom pattern that the stock had recently broke out of, and then it's formed this perfect little cup handle that is carrying it forward in a very fluid and smooth fashion. So I am seeing a potential breakout above 300. If the stock does indeed break out, it'll be carried to all-time high, which is going to be right around likely $310 to $315 over a few days of movement. So very large upside opportunity, but I would definitely wait for that breakout before entering this stock. Next stock on our list is going to be RNG. So RNG, congratulations to them. They had just made it to all-time highs once again. You can see that the stock has also formed a what looks to be a double bottom pattern. Some may argue with me, but I am seeing a one bottom, two bottom pattern right over here. And then you can see that the stock, after breaking out from the neck of that double bottom, the stock channeled down and eventually it broke out of the channel. This is going to be the breakout candle that took it above, and then it continued with this breakout candle that eventually consolidated here for a few days and now has made another upside move. So considering today is a candle after a consolidation period of 2 days, this could continue moving tomorrow or through this week. Volume looks good on the stock. You can see that through the multiple days of trading, the stock has maintained pretty decent buying volume. The primary point to watch tomorrow is going to be the 349 level. So your primary point tomorrow to watch is $349, and then your primary support is going to be $340. So we want to place a trading range in between these two price points, $340 to $348. The stock may take some time to consolidate, may even come down to $340 to retest that breakout point. If it fails to hold $340, it is recommended that you exit the stock, because the stock can actually fall all the way to $310 after that. But if the stock does indeed maintain that $340, then you can eventually watch it for a breakout above $349 to a move to $355. So pretty large upside significance here. However, I would definitely take that $340 support seriously, and I would not trade it below it. So the next stock is FCX. FCX is, wow, that's a pretty interesting move on the stock. So we've mentioned it before. We'll mention it again. You typically do not want to be in stocks that move up vertically unless you entered the stock way previously in your trading, day or career or whatever it is. So the stock has ran up significantly into overbought territory, and you can see that the stock has actually had a reversal candle and it followed up by a selling day. So the stock could very much be on the way back down to retest $24. So the primary support you want to watch tomorrow is going to be the $24 support. If the stock can't hold that $24 support, then it may very much come down to $23, and then it may come down to $21. So Definitely would not chase this on the upside, but I would consider perhaps just allowing the stock to develop before going in, because it can easily go against you from a high of this point, especially after running up this entire amount, when the stock has been actually in a downtrend for quite some time now. So anytime a stock rallies up this much and it's been in a downtrend for a long time, you want to question the rally as it heads up. So that's actually going to be all, folks. I hope you guys enjoyed the little charting session, and thanks for checking in. Have a great night.